Yeah, it's unavoidable, and that's an assumption. So I don't have reserve reports from Russia or Saudi. The Saudis, I can tell you, pull oil out of the ground very cheaply. It needs to be refined a lot more than American oil. There is a difference in oil. There's definitely a difference in purity in oil and gas. We have really clean oil and gas in America. Wildcatting kind of defined is very low science, very high risk. That's number one, and very small projects. So hey, we're gonna drill a well here and strike it rich. They raise a small amount of money for a small project. We build portfolios. So in our existing properties right now, we have over 200 provable drilling locations. So over the coming 3 to 5 years, we're going to develop as many of these locations as possible, whether it's underneath the surface or on the surface. So underneath the surface, producing oil is called PDP, or proven developed producing wells. They're revenue generating. But above the surface, it's also important to create PUDs, or proven undeveloped wells, meaning that we have the geology to say, and the engineering to say, here's the well that we would drill to strike this oil, but we're going to prepare the surface for future drilling, for either us to drill or for us to sell off to another large company to be able to come in at a profit and start drilling. So we're 100% the same way. We build portfolios. We're not looking to strike it rich on 1, 2, or 3. Again, our drilling schedule is about 20 wells per year, which is frequent. That is a very hefty workload year over year.
So what a lot of people maybe think, or you hear murmurs through the market, is that oil and gas investing is high risk because of pricing. It's kind of like the stock market, right? Talk to us about how pricing is factored into this overall business plan.
Well, I think that it's a great question too. I think that the reason people would say that oil and gas investing is high risk is because it used to be. It very much was. I mean, wildcatting is high risk. If you're raising 10 million to drill 3 wells and one of them's a dry hole, you're already down 33% in your investment. There's no possibility. Actually, you're down more, but your possibility of earning is down 33%. When you build portfolios, everyone in oil and gas hits a dry hole. Especially if they're doing verticals, which is why we focus mostly on horizontals. It's about a 99.9% hit rate, and they're very expensive. But the pricing itself does have a lot to do with it, which is why I'm here, why I'm in oil and gas. I'm a bit of a chartist. I used to manage money. I'm a trader. I've done all these things, and all the geopolitical information, economical information really is pointing towards a boom market. I mean, oil is very boom and bust. And the boom market we see right now is a 3 to 5 year cycle with prices above $80 a barrel. And that's the time you want to get in. Even when you get out, it's actually not super expensive. You're not talking thousands of dollars per barrel that you're selling for 80. There's a profit down into the 50s where we are in the market right now. So if prices dropped, we'd still be profitable, just not as profitable. But we try to generally focus on getting those types of good deals and letting volume overcomes pricing. It's kind of like a business, right? I'd rather own 5% of $1 billion business than 100% of $100,000 business. Same kind of methodology.
So Eric, you talked about that boom cycle that you kind of see in the next 3 to 5 years. Energy is very much mixed up in the geopolitical environment. And we have right now China coming off their COVID lockdowns, and we have Russia saber rattling with their energy resources in this Ukrainian war. Talk to us a little bit like the background for the energy markets and why you see it being a boom cycle for energy for the next 3 to 5 years.
Well, do you guys mind if I blow your mind for a minute with some factual information? So I've been saying this for years because scientists have proven this years ago. The largest oil reserves in the world exist in the United States between Alaska and Texas. That's a known fact. However, it's not what the media tells us. They tell us that Saudi Arabia and Russia are the largest producers and we're just a swing producer. Well, 2.5 years ago, we were energy independent and exporting energy to the rest of the world, and we had a very prosperous economy. So what we're seeing right now geopolitically with Russia and Saudi Arabia, and China is a major player in this beyond just the COVID lockdowns and the demand they're putting on the market. You have to look at the smaller swing producers, Algeria, all the small OPEC plus countries. Since President Biden went to Saudi Arabia to try to get them to increase oil production after shutting down 25% of domestic oil production, they actually reduced, OPEC plus stated they reduced 2 million barrels per day. Now, to let you know how important 2 million barrels per day is, the world uses anywhere between 102 and 104 million barrels of oil per day. The United States alone uses 18.6 million barrels per day. So 2 million barrels from a large producer is a big thing. Russia did the same thing. They dropped 2.5 million per day. And then about 2.5 weeks ago, OPEC Plus came out again and said, we're dropping our production another 1.4 million barrels per day. Now, the first two reductions, I believe. The last one, I do not. I think what we're starting to see right now, there's a lot of things that for most of our life we thought was one way, and we're starting to see it's actually another way. One thing we're starting to see right now is I don't think this recent OPEC Plus drop of 1.4 million barrels a day, I think it's kind of like the guy who falls down the stairs and stands up and goes, I meant to do that. I think their reserves are actually running short. And to prove this, even in 2016, CNN posted an article right before the election saying that America has the largest reserves in the world, and then we stopped hearing about it. So I think what we're starting to see is this recognition of the fact that these reserves in the Middle East and Russia, they've been run rampant for literally for decades, if not generations. I think their production capabilities are running short. I don't think they have the manpower. I don't think they have the reserves. And at this point in time, that's why it's such a great investment in domestic energy. You're going to have great prices. In June, we will see for the first time in about 50 years that demand will exceed supply in the market. So if you're an investor looking at anything, supply and demand in a commodity, that's your main thing to focus on. And in June, with these reductions, we will see for the first time in 50 years, less supply than there is available demand. This is a really challenging time.
Yeah, what I hear you saying, Eric, is that the old Texas phrase, all hat and no cattle. What I think what you're saying is Saudi Arabia and Russia are trying to act as though they're the big bravado, kind of the alpha male in the room. But in reality, their reserves, their ability to produce at high volumes is not as high as we once thought it was. So that's going to be the supply constraint that's going to help push a boom in energy prices the next couple of years. Is that right?
But what we're seeing right now, the first two drops, I think were politically charged because it shouldn't be a secret to anyone right now that right now 41 nations have said we don't want to use the dollar anymore. And Saudi Arabia is now selling petroleum and gas products to China in the Chinese yuan for the first time since 1979. So there's definitely political charge behind this, but the true reality of the situation is, Russia, I believe, has the reserves. The Saudis, I believe, are running short. They've been really ransacked for generations. There's not enough manpower out there and enough geology to really prove that they have the reserve. But even if they did, they're not producing enough. It doesn't matter if they have reserves or not, it's what they produce. And in the market right now, we're looking at, between America, OPEC Plus, and Russia, about 7.5 to 8 million barrels a day short as to where we were 2 years ago. This is a really damaging thing. Imagine being an electronics supplier and only having 2 weeks worth of wire left while you're producing products. That's kind of what we're approaching. We're approaching that time where we're gonna have to scrap and claw for every barrel. And if you include in the demand cycle, one thing I talk about a lot is the Strategic Petroleum Reserve, which was at its all-time high in 2020. And that reserve is designed for times of war and national emergency. So that reserve is now at its 50-year low. They've been selling our SPR oil to China and to other petroleum companies to create gasoline for 2 years. And now we're talking about World War III, where we have enough energy. Right now, our energy reserves would last our military exactly 14 days. Estimated 14 days. So if we don't have the energy, we can't fight a war. Now let's look at the other side from a supply and demand and pricing side. Let's just assume, in August, they declare war, whatever it may be. Say they're going to war with Guam, right? It doesn't matter who we go to war with. We still have to follow protocol. Part of our readiness protocol is that we have to have sufficient reserves in the SPR. So to be sufficient right now, we would need to replace 150 million barrels of oil on the spot, which we don't have. So the demand the pressure that war would put on demand, because everyone says we are in a recession. I'm not a believer that we're in one. We're entering a depression if we continue this process. That's statistical analysis. But if we look at supply and demand and the pressures in the marketplace, can you imagine what would happen to pricing if all of a sudden we needed 150 million barrels of oil? That would push pricing into the $200, $300 a barrel realm, which would be painful in every other industry except ours. So I look at our investment as a great way to hedge very easy to see forthcoming supply issues around the world.
I don't think a lot of people know is that we're not talking about just like filling up your car. Oil is in all kinds of stuff, right? So you're hitting, you've got a lot of household items, you've got accessory items, you got furniture, you got medical. What are some other things that people don't realize that we use this stuff for?
Well, again, allow me to blow your minds a little bit. First and foremost, if you take Tylenol or you take a pill in a tablet format, the bonding agent in tablets is petroleum. So you're swallowing oil. That's happening. It's what bonds you together. Our clothing has petroleum in it. In order to make anything, you need natural gas. About 75% of all manufacturing facilities run on natural gas. So there's that issue. But here's the real one that'll blow your mind. Let's talk about electric vehicles, because that's a big topic, and green energy. I hear this stuff all the time. Let's talk about an EV. Just the battery of an EV, just the battery. Number one, you need 800 barrels of oil to make the battery. So you can't build an EV without oil. Then you need cobalt and lithium. In order to get enough cobalt and lithium to create an EV battery, you've got to move about 250,000 tons of dirt. That's done with a diesel engine machinery. You need the diesel engine. Once you have the cobalt and lithium, you have to use more natural gas in the facility to melt it, to form it, to fit it, and to create the battery. All in, electric vehicles have emitted 13 years worth of carbon into the atmosphere by the time the vehicle is made. It's called offsetting emissions. So while we think that an EV runs smoothly and it's just made out of nowhere, 13 years of carbon emissions are already emitted into the atmosphere before the vehicle hits the road. Then you have an electric vehicle that needs to be charged. How do you charge an electric vehicle? With electricity, right? So electricity comes from coal, oil, and gas. So every time you drive an EV and plug it in somewhere and think you're helping the environment, you're actually hurting it because you're burning coal instead of petroleum. Coal is the dirtiest of the fossil fuels. So it's in everything. It's in everything.